George, how are you?
I'm extremely well, thank you.
No, thank you for coming on, man. It's good to finally connect with you because I've seen you out there fighting a little bit with the Bitcoiners. They've been giving you a bit of shit. You've been uh, you've been dipping your toes in the water of the Bitcoin world and not
I,
liking everything you see.
I think it's all in good fun. And I threw out some questions on Twitter the other day to try to get some answers to questions that I knew nobody could answer. And I know that sounds weird, but
Okay.
so I was trying to figure out some really kind of complex stuff that was kind of merging the Bitcoin world and the macro world. So I was asking more basic questions that I figured people could answer to try to connect the dots. And people were jumping on me. They assumed, for whatever reason, it's kind of bizarre that I just stumbled across Bitcoin like a week ago, and just
Yeah.
I
Where have
just
you been, man?
I just started thinking about this. I've been obsessing with macro since 2012, and I've thought a lot about Bitcoin. And not only that, but my YouTube channel, I've got over 400 videos now where I've whiteboard videos and interviews where I talk about macro. So it was pretty surprising to see some people would assume that it's the first time I started thinking about Bitcoin. But I think a lot of people, that they probably didn't watch my channel or something like that. But it was all in good fun.
Well, I watched a bit of it, but it's a tough crowd, man. It's a tough crowd. If you don't instantly understand Bitcoin and instantly agree with the ideology, and then you're immediately wrong and you're an idiot. So I hope you've
Well,
learned that lesson.
yeah, and unfortunately, the macro is so complex for even the pros like Snyder and Brent Johnson and Luke Droman and Lynn Alden, that there's no way that any one human being can possibly know enough to predict everything perfectly. It's like the weather. There's just way too many variables. And I've noticed what some people, not all, but what some people in the Bitcoin community have in common is they don't know what they don't know, but they think they know everything. and and those are the people that are dangerous, the people that aren't humble enough to know that there are things that they have not considered. And there are no certainties, there are only probabilities. And but it's not just them. It's that's we as human beings, that's kind of our default mode. And I think that we need to recognize that as prudent investors, regardless of what we're buying as an asset class, and realize that as humans, that's one of our weaknesses, and we need to try to keep that in check.
All right. Well, let me give you a little bit of background to my approach, and then I think we should probably work through some of your questions, and I'll tell you my thinking. So, this kind of macro stuff is new to me. I started when I started the podcast 3 years ago. Like, I'm a creative. My background's advertising. And I discovered Bitcoin, got an interest in it, and I just found the technical side highly complex and the economic side also highly complex. I'm just a creative. I like to design and create stories and create pictures and things. So I got into this podcast game just to ask people questions, and some of it sinks in. But I do have a strong conviction with Bitcoin, but I also clash with some of the Bitcoiners because I am not, let's say, I don't fully agree with all of their ideas, or sometimes some of their ideas take me a little bit longer to get. I get called a statist a lot. I theoretically like a lot of what libertarians stand for. When I try and game it out, I still find some certain issues with getting to like a libertarian society. So that's one of the areas I clash with them on, and sometimes I talk about ideas to do with the state. Like recently, I've been trying to understand why the state exists. If libertarian ideas are so good, why do we have a state? And I'm trying to understand like way humans kind of group together and things like that. So I tend to just be quite curious and ask a lot of questions, but that does run me afoul with the Bitcoiners as well. But I do have quite a high bar conviction with Bitcoin at the same time. But I like to think I make a show for people who are like me, who they don't think like Lynn Alden. They don't have 10 hours a day to spend and understand economics. They've got kids and they go to work and they come home and they've got about half an hour to an hour maybe in the car on the train where they can listen to a podcast and maybe get a few pointers in the right direction to maybe where they should put their investments. And that's me. That's like trying keeping it super simple. And I think if you've had the conversation with Raoul, which I've watched, and I think that was good. I don't agree with Raoul on everything. If you sat down with Saifedean Moose, he would hammer you into certain ideas. I'd like to think I can keep things a bit simple, but I want to have a go at some of your, because you're looking at it. So as a starting point, where are you at with the whole Bitcoin idea? Because you haven't dismissed it, you're considering it.
But that's the irony. I'm long Bitcoin.
Okay, you're in.
I own Bitcoin. I think that's a fantastic speculation. There's an incredible asymmetry. I just like I said on Twitter, I could easily argue for the price not just going to 100,000, but the price going to 1 million. But that doesn't necessarily mean that I think it's a panacea. And I think at the end of the day, because we are humans, that we end up with a very similar system to what we have right now. And what I did in one of my videos is I went back and looked through the history of the gold standard and where we started with banking. And we started with what they call full reserve banking. And in the United States, we then moved to a system called free banking. And then it was nationalized at the beginning of the Civil War. And then we had the central banking, which started in our country in 1913. And then we went off the gold standard in 1933, kind of, quasi gold standard, if you want to call it that. And then we had Bretton Woods in 1944, and that took us to the Eurodollar system, which if you study Jeff Snyder's work, he would argue that that was the catalyst to the GFC in 2008. So I go through kind of a thought experiment but my main point there is that we did all of those, we created all of that, all those derivatives, I think is a good word, because if you look at fractional reserve banking, it's kind of derivative in the sense that you're not really lending out the money that you're storing, you're creating additional IOUs, right? So but we did all of this while on the gold standard. So just if we were on a Bitcoin standard, how would that have changed? And I don't know that it would have. I understand all the arguments that Bitcoin may wipe out the entire banking system because it's far more decentralized, in the sense that with gold, you would need preferably some place to store it, because it's kind of cumbersome. If you had $50 million worth of gold, you couldn't just carry it around in your back pocket. So it makes sense to store it somewhere. And then that's how you kind of transition or evolve into the whole timeline that I outlined before. But with Bitcoin, I get it. You can keep that $50 million in a thumb drive in your back pocket, and you can take it across borders. But my point is, regardless, at some point, you'd most likely have fiduciaries, because people would want to return on their Bitcoin. And whether you lent it out yourself, your actual Bitcoin, through smart contracts or whatever, you had a centralized entity, call it a private equity fund or an angel investment fund, do it, you still kind of get to the same point. And then I argued that even if we started with a full reserve system, because most of the hardcore Bitcoiners, and I would be right there with them, the problems really start to arise when you go into fractional reserve banking. That's where you really have to start doing a cost benefit analysis, because there could be some benefits, but there's definitely some costs involved there. So that's what kind of gets us there. But even with full reserve banking with Bitcoin, or a full reserve system, I think, and even if it was totally decentralized, I think once we have a war, or once we have a natural disaster, or once we have something like that, there's going to be such a demand for more supply of Bitcoin in lending, because you got to think this through. So let's say we have a natural disaster, or let's say we have COVID. I mean, that's a fantastic example, right? So all the people that own Bitcoin, and let's say that Bitcoin is the global money. There's nothing else that exists. It's just Bitcoin. That's the reserve asset. That's the payment system. It's all in one. Well, people aren't going to want to lend that out. They're going to want to hoard it because they know that we're going to have a severe economic recession, if not a global depression. So then the Keynesians would come in and say, oh, well, this Bitcoin thing, it's not going to work. We need, for the greater good, we need people to lend out their Bitcoin. And no one's going to want to do it. So then what do? They create some sort of system that's a derivative of the outstanding Bitcoin. And like with any government program, what was it that Friedman said? The most, any temporary government program is always permanent, or something to that effect.
Mm.
And
there's no such thing as a temporary government program.
Yeah. Well, once you let the cat out of the bag, you're never going to put it back in. So that's my kind of the conclusion I came to, is that even if you have perfect money is owned by imperfect creatures in an imperfect world. Therefore, we can't expect perfect money to perform perfectly. And that's kind of my position on it.
So your main issue with having a Bitcoin-based system where everybody's using Bitcoin is that we no longer have essentially the money printer. Is that the issue?
Well, you'd take away the ability for fractional reserve banking. Well, you wouldn't, though. You wouldn't.
You wouldn't, though. No, you wouldn't, yeah.
Yeah, you wouldn't. But that would be most of the hardcore Bitcoiners' stance. They would not want fractional reserve banking because they know that just takes us right down the path of where we are today. And to be clear, I think going to a Bitcoin standard would be very interesting. And I would definitely favor it. Compared to other options, especially a fiat, right? But I do think that you'd go through a wicked deflationary cycle. And then, but after that, after you kind of clear out all the malinvestments and everything that happened as a result of the fiat system, you would have a time frame where you have very, very solid economic growth. So I'm not saying that it wouldn't work. I'm just saying that it may work very well in the next 20, 30 years, but in the next 100 years, I think we'd be pretty much at the same point where we're at right now. And you may take the position of Keynes, and that, well, in 100 years, we're all dead, so who cares? And that's valid. But when I was going through this on Twitter and on my video, it's really a thought experiment to try to ask myself the question, is Bitcoin a permanent panacea? And that's when
nothing's permanent.
Well,
as you said, nothing. I mean, yeah, nothing's
going to talk to guys on Bitcoin.
Well, no, I mean, some of the guys I speak to don't. They would say, it could be, something that lasts for 50, 100, who knows how many years. But I don't think, not everyone thinks it's permanent. But at the same time, I think we go through these evolutionary stages, right? And one of the evolutionary stages right now is that perhaps we are moving away from fiat currencies to a fixed limit currencies such as Bitcoin, and maybe that's a transition that takes, it could be multiple decades, but perhaps we are going to that because of the ills of the fiat system. I mean, because it's funny, I watched your I went on your YouTube, watched your first video, and the first thing you say, this channel is about how to protect your wealth in a world of our world where out of control governments and central banks, and I was like, that sounds like what a Bitcoiner would say.
Yeah, I mean, philosophically, I'm in line with everything, and I'm in line, and they're 99% of Bitcoiners, I think, are pretty much in line with my whole way of thinking. As the gold guys or gold gals, but it's just there's a 1% group out there that are just kind of absolutists that Bitcoin is going to solve all of our global economic and monetary problems now and forever. And those are the people that I would slightly disagree with.
Well, I probably would as well, because I don't think the one thing you don't change is human nature, greed.
Correct. Exactly.
Okay, but that's I don't think that's the biggest issue. If that's like the 1%, if you have 99% conviction, what would can you remember the other questions you put out there?
Well, I mean, one thing that I was trying to figure out is, if you can't. I was really thinking through, how does it work if the government, if Bitcoin was the only form of money on the entire planet, then my first line of thinking is how does that transition work? And I know that most of the Bitcoiners would say, well, it's kind of this Trojan horse type of effect where it goes into local economies and they start to use it just gradually because it's a superior form of payment, or maybe once the technology gets to that point, obviously, maybe they would argue it's a superior reserve asset, but maybe at some point when the technology catches up, it's a superior form of payment for the billions and billions of transactions that occur daily. And so once you get to that point, then the free market takes over and people just start to use it on their own. Problem there is that once you gradually transition, you couldn't just do that overnight, because if you just went to it overnight, then what would a country do that had absolutely no Bitcoin whatsoever? Let's say they had 10 Bitcoin. They'd have to break their payments down to just a very, very small level in order to facilitate their daily trade, right? Mm-hmm. And then you start analyzing things that take you back to the gold standard. And someone in Adam Smith and one of his colleagues or one of his buddies, his name is David Hume. And David Hume came up with a theory. It was called a price specie flow model. And basically what that was, in that case that I just outlined, the goods of that country that only had 10 Bitcoin to begin with, relative to countries that had a lot of Bitcoin, or another way to say that is an increased money supply, is their goods and services would be cheaper. Therefore, they would have a big advantage in the export market. So they would most likely export more goods and services to the countries that had an increased supply of Bitcoin. And then those Bitcoins would move into that country, and then their prices would increase because their money supply increases. And then you'd have kind of this equilibrium or balancing act. And that would work, but that transition, I don't know if in today's day and age that, where we like to avoid pain or any economic pain at any cost, that there would be an appetite for that. Now, maybe there would, and maybe it would happen just gradually over time. But that points out another thing that Bitcoiners tend to miss, is they think that, well, there's a set supply of Bitcoin, 21 million, and therefore we'll never, ever again have price inflation. But that's not true, because although there may be a set amount globally, there's not a set amount in your local area where you're buying your goods and services. It just goes right back to the price specie flow method that Hume outlined. And so if you're exporting more goods, let's say you're in that country that had 10 Bitcoin. Mm-hmm. Well, you're exporting more goods. The next year, let's say you have 20 Bitcoin. Okay, well then the cost, you'd have more money supply in Bitcoin, and the cost of goods and services would increase. So you still don't get away from, now it is far superior, because you're not going to have, like we've had since 1913, where you have just a gradual depreciation of the unit of exchange, where now it's 99 or 95% lower than it was in 1913 when we set up the Fed. So it is superior, but again, it's not a panacea. It's not to say that we would just have, for the next 100 years, every year, a 2% deflation in the cost of goods and services throughout the globe. That's not how it would work.
Yeah, so it sounds to me it's not like you don't disagree that it could happen. It sounds to me more like you're curious about what are the implications, what are the consequences of this happening.
Correct. I'm taking it. Well, I shouldn't say this definitively, but from what I can see on Twitter, in my Twitter feed, I'm taking it quite a few steps further than most of the people that are responding by setting up memes to where they're chopping off my head or something like that.
Are you having fun being poor?
Yeah, exactly.
Do you know what, the memes are fun though? Actually, I think the memes shouldn't ever be taken too serious, because they are good fun, and it's just when you're all sat there all day being miserable shouting at each other, they're a bit of fun. No, because I find this interesting, because this is what I'm curious about. It's not whether it can happen. I don't know. It's how it happens, what are the consequences. So firstly, if Bitcoin gets to I did an interview with Gary V recently, Gary Vaynerchuk.
Sure.
So I was chatting to him, and I wasn't prepared for it. He actually threw a curveball at me. He said, well, what happens when Putin and the I can't remember the guy from Brazil and India and all these more kind of authoritarian countries turn around and say you can't use Bitcoin, and if you do, you go to jail. Kind of what happens in that scenario. Now, I think places like the UK, the US have got a fair amount of regulatory protection. I don't think they'll ban it. I think it could be highly regulated, but I don't think they're going to ban it. But he did talk about those scenarios. So in my head, I'm like, well, do we end up in a world where we have two different currencies? We have fiat currencies from states that have banned it, and countries like the US who haven't. Does Bitcoin have this gravity that draws people into it? And therefore, what's the scenario then for the dollar? And one of the things I wonder is like, if there is a transition, how bloody is that transition? I'm not sure if you've read any of the work by Parker Lewis, but I've definitely sent you an article of his called "Gradually Then Suddenly," and the idea being that like this is gradual growth in Bitcoin, then suddenly it just hits us. But what is the outcome? What are the externalities for that? What happens to the economy? What happens to businesses if you've been transacting in one currency and now have got another? Or like you say, or people who don't have any? Could you see a massive economic shock? Is this one of these? Is these one of these massive transitional periods in the history of humans? And I'm reading the Sovereign Individual book at the moment. We've gone through the agricultural revolution, then the industrial revolution. We're now at the information revolution. Is it just a natural occurrence, but it's going to be bloody and dangerous, and it's going to change society? I don't know the answers, but I'm really intrigued to, if it does happen, what these are as well.
Well, that's a free market.
Yeah,
I mean, that's Schumpeter's creative destruction, and that's something that we should welcome. And I think we should want to have a free market of money. And having the government have a monopoly, I don't think is a good idea. And so I would welcome that. But yeah, there's going to be some winners and losers, and you don't know how it all plays out because there's just so many variables. I mean, I think the Bitcoiners would say that, or the real diehards would say that, number one, you can't ban it, which, okay, I guess that's kind of true in the sense that you can't literally, because it's computer code and you can't just prevent people from doing. But what you can do is you can say, okay, if you get caught using it, it's 50 years in jail. I mean, you could do that. And so then you have to ask yourself, okay, well, let's say you've got people in the United States, as an example, or the UK, and all of a sudden they come out with this 10 or 25 years in jail if you get caught using Bitcoin. Sure, a lot of the people would move, and that's the Bitcoiners. That's their that's their answers. A lot of these people would move to a country that welcomed Bitcoin, and then that country's economy would grow and expand, and all the other countries would see that, and they'd be like, okay, we need to rethink our Bitcoin strategy because it's working so well in company XYZ or country XYZ that opened their arms and adopted it. And okay, I see that, but how many people that have a wife and kids, and their kids go to private schools, and they're in 6th and 7th grade, and all their grandparents and family members live around them, are going to just pick up and move to Colombia or Argentina or something like that. And the example that I used is Act 20 and 22 in Puerto Rico. So I don't know if you're familiar with it, but right now, an American can go to Puerto Rico and move their residency, which is very, very simple. And you just spend 6 months a year basically in Puerto Rico, and you can take your tax rate from, call it 40% down to 0, and at a max 4%, and you don't have to pay capital gains. So think about the cost savings there, but yet how many people are actually doing it?
Too much friction.
So right. So how many people would actually move? I'm sure there would be some, but I don't know if it would be 100%. And then you think through, okay, so you've got this group of people that go to several countries that are transacting in Bitcoin, and that's their only currency, that's their main store of value, the reserve asset. And Okay, so how are they trading with the countries that banned Bitcoin? So are they, how does that really work? Are they taking in fiat? Do they have to create their own paper currency that's backed by Bitcoin and send that? And how does that not lead to a fractional reserve system? And if you get to a fractional reserve system, then how does that not take us down the path that we have been on with the gold standard? Granted, though, it would be far more decentralized. So it's definitely it's a very messy process. I'm not saying that it's something that would not be beneficial, and I'd like to see it play out. I'd like to see the free market take charge. But again, my point is that it is not a panacea, and it's not something that a lot of people on Twitter assume that if we just went to a Bitcoin standard overnight, that all of our economic problems would be solved. It would cure cancer. We would move on to this utopian society where we're all rich and it eradicates poverty, and we have this, the birds are chirping and the sun is shining. I don't know if we have that, although there may be a significant improvement.
So what is your investment thesis? If you're long Bitcoin, is it just digital gold for you? Is it just a scarce asset?
No, it's not digital gold, because I see gold as insurance, and I don't see Bitcoin as insurance. I just see Bitcoin as a very good speculation. And I divide my portfolio into something I call 10-80-10. So 10% would be allocated to insurance for me, to physical gold. 80% would be allocated to what I call investments, quote unquote. And I define an investment as something that has to pay me to own it. So a dividend paying stock, a rental property, and then 10% allocated to speculation, where I think there's significant asymmetry to the upside. So Bitcoin is perfect for that. Back in March, I bought a few more speculative assets. I bought uranium, and that's something that doesn't really pay me to own it, but I saw some good upside there. I think the miners, the gold miners, I would categorize them as a speculative asset. And so that's kind of how I fit the Bitcoin into the portfolio. But for me, gold and Bitcoin are not competing asset classes at all. They complement one another.
Okay, interesting. We should get into that. So, but are you speculating on the faith of other people rather than your own faith in Bitcoin?
Well, I don't know that I have a faith in anything. I try to look at history, and I try to look at just probabilities, and then just try to allocate my portfolio accordingly based on the structure that I think works best for my personality type. I try to eliminate being married to any belief system when I'm investing. And I like to try to unplug as much emotion and bias as I can. And that's one thing where I'm a little hesitant with the individuals on Twitter, where I say I think we should be invested, but I don't think we should be emotionally invested. And that's the big difference there.
Yeah, I do think sometimes some of the emotionally invested, louder voices I don't think they're representative of everyone. I think they are a minority, and that's not for me to say they're right or wrong. And I think some of that emotional investment is, I think you can get emotionally invested in something because you own it and you have a bias and you want the price to go up and you want to realize gains. But I think for the certain group of people, whether they're it could be libertarians, it could be people who are just pissed off with the world right now, who just see this as something a little bit rebel, a little bit anti-state, anti-government, the fact that you can own something and spend and send it without the government stopping you. And also they've been sold an idea that maybe there is a meme, Bitcoin fixes this. So I think some people have been sold that kind of idea. And I guess you get people who are emotional around investments financially, but I think that some people are also emotional around this ideologically.
100%. And that goes back to Twitter and an article that I posted and referenced from this journalist, not an economist, but a journalist who had a hypothesis that in the West, we have gradually moved away from religion for many decades. And he was not arguing whether that's good or bad. It is what it is. But
Hmm.
he was arguing that as human beings, we need something in our life that gives us meaning. And he thinks we may have filled that void with things like politics, which is why you see in the United States political issues being so divisive. And I was thinking to myself, maybe Bitcoin is filling that void of religion for some people. And just to be fair, I think gold may be filling that void for some people, and maybe even libertarianism. So again, I think we just always need to look in the mirror and understand that as human beings, we have these weaknesses. Be cognizant of them, and make sure that we're just checking ourselves to ensure that that we're not making those mistakes that we're prone to.
Okay, I still don't fully understand what your investment thesis is. Okay, so it's a speculative investment for you, but what is it about Bitcoin that you like?
Well,
why do you think it has a value?
Yeah, so scarcity. You've got a scarce asset which has a lot of utility for cross-border payments and to carry your wealth in your back pocket. I mean, that's first and foremost. And then if you do have governments become more and more draconian, which I think they will, then that adds a much greater argument to have some sort of Bitcoin. I mean, as an example, I've owned some watches that are rather high value. And I own them because I know that at a moment's notice that I can just put them in my bag and I can go to anywhere. South America, I could go to Europe, I could go to Asia. And I've got that purchasing power, significant purchasing power, just right in my carry bag. And I don't have to announce it or anything. And I think Bitcoin serves that type of purpose, in addition to several others. I'm just giving you one example of why I think more and more people will be interested in Bitcoin. You see what's happened in Venezuela, or you see what happens in countries where they have a lot of capital controls. Bitcoin, for obvious reasons, becomes very, very popular. And so I think that in the future, we're going in the developed world and other economies, we're going to have more capital controls. We're not going to have less capital controls. And I think that that is a tailwind for Bitcoin in an asset that's obviously scarce. So you see, for the interim, from where it is now to 100,000, I mean, I see a direct path. It makes a lot of sense. But once it gets to the point where people are using it as a global money, and then I start to see some areas where it could run into a few issues. It's not to say that it won't power through and get over those speed bumps, but I can definitely see a path. Now that said, in the short term, I'm not as bullish as I am over the long term. So the reason for that is because whenever I see a lot of people, a lot of retail, really super excited about an investment, I get very hesitant. Like I like buying things that everyone hates. And as an example, I went out the other night and I was with a group of young people along with some friends. And so I was talking to these young people about investment. And these are college students, right?
Mm-hmm.
And every single one of them was staying up till like 4 o'clock in the morning trading Bitcoin. And that's all they were talking about is Bitcoin. I had my housekeeper come over, excuse me, the other day, and she asked me if she should start buying Bitcoin. See, so
I hope you told her yes.
Whenever I see that, I'm long term, I'm very bullish, but short term, I get a little hesitant. I like owning things that everyone hates, they despise. I like owning things where if you told someone in the general population that you were buying this, they'd tell you were absolutely crazy, or they wouldn't even know what you're talking about.
But there are still a lot of people that hate Bitcoin as well, right? So you've kind of, I guess, in the trying to look at your echo chamber of Twitter, I imagine what's happened is because you're in that macro world, the Bitcoin stuff has started to leak in a bit. So you're seeing it a bit more and a little bit more.
My housekeeper is a 65-year-old Hispanic gal that barely speaks English.
Yeah, no. What I'm saying is, I'm saying it started to leak into your world though a little bit more. You started to become a kind of a bit more exposed to Bitcoin, and therefore you see macro people and maybe seeing some positives. There are a lot of people who are still very negative about it as well. You know, equally, if you're a housekeeper, there might be another housekeeper who just thinks it's nonsense. I guess though sometimes like retail people, when they feel that they're missing out, they get sucked in. We had this in 2017. There was a period.
Yeah, that's what I'm saying. Just short term. Just short term, I'm a little hesitant. I mean, contrast that to something else I bought in March, which was coal.
Okay.
My housekeeper's not coming to me asking me if she should buy coal, or there's no cyber hornets on Twitter that will attack you if you say something negative about coal. See, that's what I like. I like.
Is there no coal Twitter?
I'm sorry?
There's no coal Twitter.
Right. See, those are the investments I like. It just, because probably the main reason that, excuse me, is my favorite investor is Jim Rogers. And I just, philosophically.
Why do you like him?
I'm sorry?
Why do you like him?
Several different reasons. Philosophically, I'm aligned with pretty much everything he talks about in his belief system. I've had the opportunity to interview him personally. And he's such a great storyteller. Excuse me. And he's had the opportunity to travel the world and take all these adventures. And it's very similar to how I lived my life since I've retired in 2012. And so, and probably the biggest reason is because my father passed away in 2005. And he was he was very, very old when I was born. So he passed away at the ripe old age of 92. But I mean, Jim Rogers reminds me of my father. Every single time I see Jim Rogers or hear him speak, I see my father. And it brings back such great memories. And so all those things combined is why he's my favorite. When I first started studying investing in macro, I really dove into his content. And I remember reading about him in the Market Wizards books by Jack Schwager when he was doing those interviews in the late 80s and the early 90s. And it really resonated. So anyway, Jim likes going into countries and buying assets that most people wouldn't touch with a 10-foot pole. I mean, he goes in and he's bullish North Korea, for heaven's sakes. He was bullish in Myanmar way back, probably 10 years ago. He was bullish on Myanmar. I mean, he's been bullish in Zimbabwe. He's been bullish Tanzania. He's now bullish Venezuela to a certain degree. So that's what I like to do. And again, I want to be clear. I'm not saying that that's the right way to invest. Not at all. I'm just saying that that's the way that resonates with me. And that's how I feel most comfortable investing or allocating assets, allocating resources. And I think it goes back to the point where I think for most people to make money over the long term, you've got to first and foremost understand your strengths and weaknesses. You have to understand how prone to emotion you are naturally. And then you have to set up your portfolio accordingly. I think most people get hyper focused on what to buy and what not to buy. And they totally ignore portfolio construction. And I think that they would be better served taking 90% of their time and energy and allocating it to portfolio construction compared to maybe 10% where they actually look at the asset, where most people, 99.9% of their energy goes into picking the asset and zero, maybe 0.1% goes into portfolio construction and understanding how you respond to emotion. When are you going to buy? When are you going to sell? How are you going to feel if Bitcoin goes down by 100%, or excuse me, by 50% in a pullback? And then if you're someone that's going to lose sleep over it, well, then you should have Bitcoin as a smaller percentage of your portfolio.
Do you think some of this though is like, I mean, it sounds like your investment strategy is obviously quite sophisticated, but also like I know you're big on property, right? But you've got to have you got to have capital to begin with to be able to invest in property. I know in the UK, so for example, you will need a deposit. You have to consider a higher capital gains tax if you ever want to sell it. I think to scale property investment so it delivers a solid long-term income, I think you need quite a bit of capital. And I think perhaps, I've got 2 kids. My son's 16, and he wants to go to university. I'm thinking, right, the amount of debt he might collect there, and then once he leaves uni, if he wants to buy a house, I know how the houses are priced, even around here where I live. I'm not even in London. I think for some people, maybe they're thinking Bitcoin is a chance. It's quite an easy investment. It's quite a simple one, and maybe it resonates more with a kind of a future vision of the world that they're seeing, and it just kind of reduces a lot of the friction for investing for them. I could imagine trying to build a portfolio similar to yours is, quite capital intensive. Am I wrong?
I mean, Bitcoin's what? 17, 18,000. I mean, you need quite a bit.
No, but you don't really, because if Bitcoin went from here, say, and did another 20x, it's just a 20x of your initial investment. So even if somebody puts in $5,000, that could be $100,000. That could be life changing money. But if you want to do the same with property, you might not even be able to get on the property ladder with that.
Right, but let's do pros and cons. So right, let's just say you buy one Bitcoin. And let's just say that's roughly 20 grand. So right now you could buy a rental property in the United States for 20 grand down payment, a very solid rental property. Mm-hmm. And you'd be cash flow positive, and you'd have a 30-year fixed rate mortgage. So you're being paid to short the dollar. You're being paid to short fiat, but nothing's guaranteed, of course. But the probability of that coming to fruition and that working out is far, 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 far greater than the probability of Bitcoin going to, let's say, 100,000. Right? And I'm not saying that Bitcoin won't, but let's say the probability of that happening is 80%, where the probability of your little rental property paying you a positive cash flow for the next 10 years while you're shorting the dollar through that 30-year fixed rate mortgage is probably 95%. So it's not again, you're kind of comparing two things that I don't think I think are apples and oranges, because one's an asymmetrical speculation and one is just an investment where what it's going to produce. The delta there is how much you're going to make from being able to pay back your mortgage with depreciated dollars. And that could be a significant transfer of wealth from the lender to the borrower. You might even make as much on that as you make on Bitcoin. See, that's another thing to think through. It's like, in a world where, let's just use dollars, in a world where Bitcoin goes to 100,000, or in a world where Bitcoin goes to 1 million, where is the dollar in that world relative to other goods and services? You see, how much goods and services or CPI price inflation would we have experienced in a world or in a US where Bitcoin was $250,000 a coin, right? And then
most people do those
mortgage.
Most people do those predictions, tend to do it based on current buying power of the dollar. So they say when it goes to the prediction of going to $1 million, they do it based on market capitalization, based on the current purchasing power. I mean, if you've got inflation as well, I mean, who knows? But I think my point was, it's kind of opportunity cost for investors. Like, if you had 20,000, like, a lot of people don't even have $20,000 to invest, but just say they did. Perhaps that is the problem, George. People just don't have that much money to invest.
An opportunity cost, you're assuming that it's definitely going to go up. So why wouldn't you just take 100% of what you own? Why wouldn't you max out all your credit cards and just buy Bitcoin?
Well, do you know what I did today? It's kind of I wasn't even going to admit this. I took out. So I'm pretty long Bitcoin, and when the price dipped, I did an interview yesterday about what the micro strategy, what Michael Saylor did, which is essentially a speculative attack where he's borrowed money from the bank. From investors, and he's going to take another $550 million position in Bitcoin. And, he has to pay an interest rate of 0.75%. Now, I can't get access to that. I was like, right, I'm going to do the same. So I went straight onto my bank. I was like, what can I get instantly? I could borrow £35,000 instantly and it's 7.9%. So in 6 years, I have to pay back 43,000. And I was like, right, I can buy 2.55 Bitcoin for that. Will that 2.55 Bitcoin in 6 years be worth more than £43,000? I was like, almost certainly. So I just did it, more as my own little test. And I guess that's my way of shorting the pound.
But you're not getting paid for it.
No, I'm not getting paid for it, but I've got an income. I've already got an income.
And there's far more certainty with a rental property, or I shouldn't say certainty. The probabilities are far greater that rental property will be worth, in goods and services terms, what it's worth today in 10 years than Bitcoin. Although I would argue again that Bitcoin, the probability is good that it increases significantly. But I think that you got to go back to Warren Buffett. And what's the number one rule in investing? Don't lose money. And number 2 and 3, don't forget number 1.
So we're talking about risk appetite now, then, really, aren't we? Because I would say, therefore, property investment's low risk. I only own one property, and between you and I, George, just like if Bitcoin went to 100,000, I might sell a bit of Bitcoin and buy a couple of properties and have a bit of a mixed portfolio. But at the same time, like, I imagine you're kind of like, you have a lower risk appetite than I do. I have quite a high risk appetite, and I quite like the idea of, with Bitcoin, the moonshot. I do like that idea.
Yeah, but that's why for me, it's just a part of the portfolio. It goes back to portfolio construction. I don't know. I mean, you're talking to someone that went almost all in real estate in the United States in 2012. You're talking to another person that levered up his properties in the United States to buy property in Medellin, Colombia, the home of Pablo Escobar, in 2015. So I don't know that I have a low tolerance for what most people would consider high risk plays. It's just I always go back to the basics, and I believe that over the long run that I will make more money if my number one goal is don't lose any. And I think that's the irony, and again, it goes back to human nature, that people who just start with the priority of not losing money over the long run will end up making more money than people who go out and just try to swing for the fences with every single investment.
So is that one of the biggest kind of mistakes you see then? People are essentially going for moonshots and risking, over-leveraging themselves, investing in things they don't really understand.
It is, but it's not just with Bitcoin. I want to be very, very clear. I want to be fair. I don't just see that in Bitcoin. I see it in gold as well. I see it in silver. I see people that comment on my videos that they're the exact same thing that you just talked about with your credit card. They're doing the same thing with gold. So personally, I wouldn't do that with any asset, not just Bitcoin, because for the reasons we were talking about.
Do you not think, though, also, have you not got a slightly bigger concern right now with the state of borrowing, with the pandemic, how much, say, the US government's borrowed, how much the UK government's borrowed? Was it something like, is it something like 80% of the money that's been borrowed has been in the last year? Printing trillions at a time?
Well, I can give you, I can't give you stats on the UK, but I can definitely give you stats on the United States. So this year in the United States, our deficit will be right around 5 trillion. And to put that into perspective, the United States government accumulated about 5 trillion in debt from 1776 to 1996. So
wow.
The first 220 years of the existence of the United States, we racked up the same amount of debt as we will just this year. And so those are just staggering figures. And that's another tailwind for Bitcoin and for gold, anything that's of limited supply.
Does that stuff worry you, though? Because my worry is just holding pounds in the bank. I mean, the other day, I can't remember, it's like Wednesday, I woke up and The purchasing power of the pound had dropped by like another 1.16% due to the Brexit negotiations. I was just thinking, my business does okay. I've got okay savings, and I was just thinking, I don't want to be holding these pounds.
Yeah, that's a very nuanced question because it depends on what you're wanting to buy longer term with those currency units. Because inflation or deflation, it doesn't happen in a vacuum. So let me give you an example of the 1970s in the United States. We had consumer price inflation. Most people remember that was a time of stagflation, so high consumer prices, higher and higher consumer prices, and high unemployment. So most people would assume that in that type of environment, assets increased in value because the nominal price went up. But we look at 72 to 74, and we had a huge bear market in the S&P 500. It went down by almost 50% in nominal terms. When you adjust for inflation, it went down by more than that. So my point is you can have consumer prices going up and assets go down. You can have assets go up and consumer prices stay the same. You can have consumer prices go up while at the same time relative to other currencies, it's going up or down in value. So my point is, if you're someone who wants to buy, let's say stocks, or with that money, then you might want to keep some dry powder there, based on what you think the probabilities are of the stock, whatever stocks you want to buy, coming down in value. Therefore, your currency gaining purchasing power. And that's another reason why I like gold, because gold isn't as volatile. And I understand that Bitcoin may get to a point where it's maturing, so it may not be volatile. It may have the same volatility as gold or something similar to it. But if you've got gold, you're kind of maintaining your purchasing power to a certain degree. And if you got a little bit of cash, I think that's prudent right now, just to take advantage of any significant downturn we have in the market. As an example, going back to March of this year, I had a decent amount of cash just on the sidelines. And although I didn't want to have the cash, because to your point, I'm losing purchasing power at least 2 or 3%. That's if you believe the CPI every single year, and that compounds. So after 10 years, that's a big number. But I was still okay, because there it's a cost benefit analysis. So you have a cost of holding the cash in the sense that you're losing purchasing power by call it 2 or 3% per annum. But you have a benefit if you think that stocks are in a bubble and you think there's a 75% chance that they correct. So you've got to weigh the cost benefit there and determine how much you think is smart to keep on the sidelines and in what form. And some people do that in Bitcoin. Okay, for me, I don't see that as a good move, because it's going up and down so much. And if I wouldn't have had the cash that I could have just instantly put into play back in March, I wouldn't have been able to buy a lot of things very, very cheap, or as cheap as I was able to end up purchasing them.
Yeah, so I think the big difference is, I do think it's that different type of risk appetite. Yes, you have an appetite for risk based on your investments, like you said in 2012 and in Colombia. I think someone like myself, a bit like Michael Saylor, this is kind of like a moonshot still. It's still a moonshot. This is if Bitcoin continues to perform as it has done over the next decade. Yes, I might not have something like a property that delivers an income stream back, but it might be something that delivers life-changing money. And I think some people like that kind of risk, and they're interested in that. The other thing is, with what you're doing, it's quite sophisticated. I imagine it's a lot of work. It's a lot of work to manage those investments, a lot of work to constantly looking at the market. So I don't have the time, and I don't even understand it. For me, it's quite simple. It's like, I buy and I hold Bitcoin, and every year I just kind of track it. And do I have the same conviction? If I do I invest more, or do I take some out? And I'm 4 years in now, and I have pretty high conviction. But I just think perhaps it's just different investments for different folks.
Yeah, and it also depends on your personal cash flow and how secure you are in your business or your job. And if you're making $500,000 a year, and you're very confident that even in a recession or an economic depression, that you're still going to be making that $500,000 a year, why not take a flyer on Bitcoin or even a gold mine or something speculative like that? It can make sense. Then for others that might not have that cash flow, maybe they inherit $100,000 from their grandparents, and they're making $30,000 a year, barely making ends meet. Maybe it's not as good of an idea. It's all kind of an individual decision, but just I think people should be very cautious that they're investing and they're not gambling. And for each person, that they might define that a little bit different, but I think it starts by actually defining what that means for you, and make sure that you're not falling on the side of gambling. Because if it is gambling, then it's probably more efficient just to go down to the local casino and just put it all on black.
I would disagree with that, but I understand the sentiment. I would rather have I think there's a certain amount of a gamble involved in, like, when there's very low risk. It's not much of a gamble with property because you're owning an asset, right? You have a thing. It's similar with gold. You have a thing. When you're investing in, I think I've never really done stocks and shares, but with that, you're at the risk of the company. If the company, something goes wrong with the company, and Bitcoin, you're at the risk of it, catastrophic bug or a government stopping it. But these are the threats we've heard for 12 years now, and it's a lot stronger these days. It's a risky investment. I guess, like you say, it depends how you define gamble, but I certainly think it's a better bet than.
I want to be clear. I'm not saying that. Not saying that buying Bitcoin is like going down and playing roulette. That's not what I'm saying. I'm saying for some people it may be. If you're that individual that's got $30,000 a year, and you could lose your job because of COVID, what have you, and you get that 100,000 inheritance, and you just take every single penny and buy Bitcoin or buy gold. I mean, same thing. I think that would be just as much of a gamble. Again, I think it goes back to portfolio construction. And if you're setting up your portfolio in a way where you have an edge long term, then that is investing. If you are setting up your portfolio to a point where you don't have an edge, then that's gambling. And see, that goes back to your personal, your emotional stability, because that guy or gal who is just making a modest salary, think about how much pressure they would feel if they had 100% of their portfolio in one asset, regardless. They would have that app on their phone and they'd be checking it like 10 times a day, probably 10 times an hour. And they would be going through emotional swings up and down every single time the price goes up. I mean, that's not investing right there.
You're describing my life there, George. This is what it's like.
Yeah, see,
got 100% in.
Again, to each their own, but for me, that's investing is where I'm not looking at my phone. Let me put it to you this way. I check my portfolio so little that I don't even remember what my password is for my brokerage account, because I haven't checked it in since March. I have no clue what it is, and that's perfect. I went in, another example. I bought shares in Cyprus, and this was maybe 2013, maybe. It's when they had their bail-in. Remember that? And their market went down by 99%. So I went in and bought some shares, and I literally didn't look at it until I did a whiteboard video in 2019. And I needed to pull up some data. I'm like, I'm going to check on those shares and see what they've done. I didn't look at them for years. And that's just, again, it's just my personal opinion. I think that's how it's prudent to invest when you've got your portfolio set up in a way where you're completely emotionally detached. I remember, again, going back to a story of Jim Rogers, where he was talking about going through Africa. And there was this country where, very obscure, and he was bullish for whatever reason. I guess maybe he was riding his motorcycle through or one of his adventures. And he set up a brokerage account just so he could buy basically every stock on the exchange. There might have been 4 or 5 stocks. And his broker calls him and says, Mr. Rogers, would you like me to send you a statement once a month? And he says, absolutely not. Whatever you do, don't send me a statement. The guy says, well, how about once a year? He says, no way. He says, if you send me a statement, I'll fire you. So his broker was kind of baffled. He's like, well, why? He's like, because if you send me a statement, I'm going to be tempted to sell. He says,
all right.
I don't want to know about it. I don't want to know what I'll figure it out in 4 or 5 years when my investment thesis plays out.
All right, George. Well, I'll tell you what, I'm not going to check the price of Bitcoin tomorrow.
Good.
I'm going to do a whole day. I'm going to have a whole day off it. Well, listen, look, I get it, man. I having spoken to you now, I understand it a bit more. It's just a different way of investing. Like, you've obviously got a very sophisticated approach, which obviously has been very successful to you. So, listen, I appreciate you coming on talking about it. I guess a good way to end, if people are listening and they're thinking, okay, George is smart, I'm going to go and check out his YouTube channel, which I'll share in the show notes. What would you leave like people with a bit of advice in? What's like a very important lesson that you've learned in investing?
Well,
or a good starting point.
Yeah, I think especially in today's day and age, you've got to be prepared or you're going to be a victim. And I've been saying that a lot lately, because going back to our earlier conversation about these governments in the developed world just taking their debt through the roof and printing money. Who knows whether we're going to have UBI? They're distorting the free market in incredible ways that we really can't fathom with the misallocation of resources. And there's no free lunch. And at some point, those chickens have to come home to roost. So I think the worst thing you can do right now is just kind of whistle by the graveyard and pretend that we're just going to wake up after we get after COVID goes away and everything's going to be back to quote unquote normal as far as economically. And I can assure you that that's not going to happen. We're going to go through some significant changes, and there's going to be a big transfer of wealth from certain individuals to other individuals. And if you're not paying attention, it's a lot like 2008, where the people that weren't paying attention just got crushed. And especially if they're in the baby boomer demographic, you can't afford to lose 50% of your net worth. You don't have enough time to make it back. And so just watch or listen to podcasts and shows like yours. If you listen to Macro Voices, listen to Real Vision, listen to the other Bitcoin podcasts. There's a lot of Bitcoin guys out there that are real sharp, super sharp when it comes to macro, that are very sophisticated. Listen to those and just absorb as much content and and educate yourself as much as you can, to where you're cognizant of what's going on, to where you can assess the probabilities for yourself and then take action.
Some great advice there. Brilliant. Well, listen, appreciate you coming on, George. See, we're not all mean in the Bitcoin world. Some of us are friendly. And,
No. It was good fun going back and forth, and I actually poked a little fun at them in my whiteboard video the next day. So it's all we're all on the same team.
Where do you want people to go? Do you want them to go to your YouTube channel? Have you got a website? Where should people go to find out more about what you're doing?
Just go to my YouTube channel. It's George Gammon. Last name is Gammon. They can check me out on Twitter. Same handle, George Gammon. My website is georgegammon.com, whichever they prefer.
All right, man. Well, listen, I appreciate you coming on. And have a nice weekend.
Awesome. Thanks for having me.